Hello, fellow investors. Warren Buffett bought my stock, Paramount Global, Para stock. He bought over 69 million shares, worth $2.6 billion. Their average cost is 37.81. At the current price of 33.91, he is down 10%. Imagine if SEC filings aren't made public. Retailers wouldn't have bought into the stock and he'd probably remain, left holding the bags. This is why having a process is important. You get ahead of these things. As I mentioned in my portfolio reveal, I hold Para stock at an average price of 29.06. I didn't think I'd hold it long term, but when I heard this news, I'm kind of weighing things now and I'm reconsidering. Now, this is a classic Buffett style investing. Basically, he's buying a discounted price stock with a decent dividend yield. It's like my style. It's the same with Citigroup. I was looking very closely at that stock, C stock. I was just waiting for the 5% dividend yield before I finally buy the stock, but the SEC filings got released. Then suddenly, these bullish people came into play and says the stock is now a buy. So, I mean, where were you before Warren? Now, if you're late into the game, I'd understand you want to own Para now for yourself, but at what prices should you buy Para stock? I'm screening Para because I know you're chasing Warren Buffett stock. Now, if you've been following me and my process, here's the valuation summary of Para stock. I'd tell you now that Para is still a buy. Trading at a discount, I could be adding to my position any price below $35, $36, my high entry price. If you're new to the channel, I'll explain these numbers to you, but before that, if you could just hit the like and subscribe, it would help a lot to, reach out other retail investors, new and old investors, and finally introduce them a new process, a somewhat legit one. And who knows, you might get the best entry price for your favorite stocks. I did it with Baba, with Apple, with Google and Microsoft, and maybe I could do the same with your favorite stock. First metric, we want an EPS multiple lower than 3. It's 0.92. I use this metric usually when I'm screening multiple stocks. If it's above 3, I consider them overvalued, unless I look into them individually and reassess things, because it could be that the EPS is just too low or DP is just too high. For Para, both considerable, at least in this current situations. EPS is increasing, good. OSN increased though. I'd like to think it's because of the merger, Viacom and CBS. It also had something to do with the Archegos collapsing, so you might want to look more into that. Second metric, we want to pay $1 or less for 1% of the money they're making. Meaning, we want to pay 1 PE or less for 1% of their margins. This is based on the lowest margin between the net income and the free cash flow margins of the current year or previous year, the trailing 12 months, and the 5 and a 10-year average margins. Their margins play around 6 to 14%, so you might want to buy between those PEs. Use the lowest margin of 6.56. It's now trading at a discount, 0.86 times margins. I use 30% margin of safety here, the usual. Right now that they're spending for their streaming services, we want to be conservative. We want to buy Para at low PEs. I set a 4, 5, 6 PEs, entry PEs for the stock, but it could go higher as their spending gradually decreases. For now, I'd be conservative with my entry PEs. Third metric is PE to price to free cash flow. We want to buy the stock at PEs lower than their price to free cash flow. Now, with negative cash flow trading 12 months, it's because of their spending. Obviously, this metric would take a hit. This is why you want to be conservative with your PE assumptions. Fourth metric is designed for stocks that pay dividends. This is basically the free cash flow margin once the dividends paid to investors are discounted. This metric also gives you the company's future prospect. Like now, they have negative free cash flow. The obvious thing they do is to either issue more shares or issue more debt to pay out dividends. Long term, this should give you an idea of their future prospect regarding share buyback and dividend increment. Now, for Para, they have not increased their dividends for 2 years now, and probably for extended period of time, because of course they're spending right now to further the company, and it would be wise not to increase the dividends. But again, it's within the company's discretion. Fifth metric is historical PEs. The metric suggests it's trading at a discount now, 0.48 times the lowest average historical PEs. These are some useful financial metrics I look out for stocks in general. PB ratio is so low, 0.95. This is just a screaming buy. It basically says cheap. It's almost rare to see stocks trading below 1 times book value. This is easily a buy based on PB ratio. Current ratio remains strong, 1.58 for the quarter. Strong cash position, but again, weak free cash flow right now. I hope I discussed these numbers well. They're all connected. I didn't change any of them. I have fair value for Para, $40 per share. Intrinsic value of $52.4. This is from Guru Focus. So basically, Guru Focus agrees with my metrics. I could be buying or adding to my position for Para up until the price of $35, $36, my high entry price. But I'm very conservative with my dividends, with my dividend yield of 3%. So $32 is like my best entry price. But if you're not like very conscious about dividend yields, unlike me, then Para is still a buy within this range of numbers of prices. Remember, Warren Buffett has a cost average of $37.81. You could still outperform Berkshire if you buy below his average price. So yeah, if you're looking to buy Para, I'd still recommend the buy on the stock, but of course, there are risks. It could go down because of the spending. They could easily dilute the shares and issue more debt, which could bring the EPS down and the prices down eventually. But anyway, that's my take on Para. Again, if I help in any way, shape, or form, maybe subscribe or like or comment down your thoughts. See you on my next video.